Welcome to this online training on integrating simplified cost options in the project planning. Project preparation can be quite a tedious task, and many organizations participating in cross-border cooperation projects have asked the programs to make things easier. So the project application process under TESIM NEXT has often been simplified, with less paperwork, allowing you to focus on the planning of the project content. This also applies to the project budget. With the increased use of simplified cost options, such as flat rates and lump sums, the project budget planning should be simpler. In our previous video tutorial on budget definition and financial planning, the project partners, Anna, Boris and Carla, have been estimating all the costs needed for their project activities, based on the expected real costs. Let's see now how the use of flat rates and lump sums could impact their cost estimate and project planning.
Dear colleagues, let's see where we are with our budget. Let me know if you have planned all budget headings or if you have any questions.
Well, we already estimated most of the project budget. There is, however, one requirement that I did not fully understand. The guidelines for applicants mention some kind of flat rate for travel and accommodation costs. Can you tell me what exactly we have to prepare for this part of the project budget?
Yes, we're also wondering. But I already estimated the costs of business travels and we are ready to submit all of the data to you.
Actually, if your program foresees a flat rate for travel and accommodation, you do not have to worry about preparing the lists of costs at all, as the budget available under the flat rate will be calculated automatically. With the real costs, first, you have to know the costs for each of your business trips in order to estimate the necessary travel budget. Second, when implementing the project, you have to report the costs of each business trip. Now, with the flat rate, your travel and accommodation costs are calculated as a proportion of other costs, usually a percentage of your staff costs. In your case, you have estimated, based on your activities, that the project staff costs will amount to 100,000 euros. In your program, the travel and accommodation costs are calculated as a flat rate of 15% of the staff costs. So the estimated budget for your travel and accommodation is 15,000 euros. You should therefore plan your project travels based on this amount. And provided that over the course of the project, you can justify the staff costs for the amount of 100,000 euros as expected, you will receive 15,000 euros to cover your travels and accommodation. When reporting the project costs, the reporting system will automatically calculate the travel costs that you will receive for each reporting period. The good news is that under the flat rate, you will not need to report all lunch expenditures or train tickets or any other financial information. So you will save time to focus on your project instead of drowning in administrative tasks. Still keep in mind that for flat rate costs, you will need to be able to prove that the activity took place. Depending on your program requirements, for example, photos from the meeting or your organization's usual short business trip report can serve as evidence.
Indeed, that sounds way easier than planning all the detailed expenses and then dealing with each receipt. It's one less budget heading to describe.
Okay, I see all the planning I've done for the travels and the costs I've estimated are of no use then. But that means all our travel costs will need to fit into this amount automatically calculated, which is not based on the real costs of our travels. What if we need more money for travelling? And actually, what if we spend less than these 15,000 euros?
Well, we should adapt our travelling plans. And if we implement the project, we will need to monitor closely, not to spend more than this percentage allocated for travel. And we should try to make the most of this budget to benefit our activities during project implementation. But it will give us a lot of flexibility to adjust our travelling as needed. This is really useful.
Indeed. Flat rates mean more flexibility and less administrative procedures. All TESIM NEXT programs have introduced some flat rates in the project budget. Well, all flat rates work in a similar way as in the example with the travel and accommodation costs. First, you have a predefined rate that is a percentage of other costs that serve as the basis for the calculation. And second, once you plan the basis costs, the amount of the flat rate is calculated automatically. The guidelines of your program defines what are the basis costs, and the application form calculates the amount of the flat rate, so you do not have to do it manually. Most Interreg Next programs have introduced a flat rate for staff costs. It is typically calculated based on the project direct costs such as equipment, infrastructure, external services, and others. Let's assume that your project's expected direct costs amount to 250,000 euros. With a staff cost flat rate of 20%, you can budget 50,000 euros for your staff. This amount is a crucial starting point because you need to ensure that your planned activities can be carried out with this budget, that you will have enough human resources. In case the budget for staff costs appears insufficient, you need to integrate this in your activity planning. You can maybe consider investing more or drawing further on external expertise, so that the amount calculated via the flat rate increases and to get additional human resources. This, of course, has to make sense with the scope and objectives of your project. In some programs, you may actually have several flat rates feeding one another. For instance, the travel and accommodation costs are based on the staff costs, which are themselves based on the direct costs. In this case, it is even more important that you do a careful planning of the expected direct costs, as this is the only way you can influence the other budget calculations. Have a look early on at your application template to test different budget estimates and to check the implications for your project budget and activity planning. The usefulness of flat rates is even clearer during the reporting. No need to submit receipts, individual invoices, timesheets. The process becomes simpler. You receive funds based on the flat rate calculation. For example, if you report 100,000 euros as eligible direct costs in a reporting period, you'll be entitled to 20,000 for staff through the flat rate of staff cost. However, keep in mind, since the flat rate depends on the size of the basis costs, there might be reporting periods where you receive more than you actually spend for staff, and others where you receive less. Make sure that you take this into account in your financial and activity planning to minimize the risk of a cash flow shortage. And discuss this with your organization's accountants so that they understand how the payment from the program is calculated when flat rates apply. Some Interreg Next programs may also consider using a simplified cost option called lump sum. In case you meet this type of cost, please understand that a lump sum is a fixed amount determined in advance for a specific activity or output. For example, if there is a lump sum for organizing an event, such as a training session for young entrepreneurs, you'll be paid by the program based on the proof of delivery of this training session. No need to report any invoice related to the event. Of course, you will still need to carefully plan and monitor the activity and its related costs to be able to carry it within the fixed amount. So with a lump sum, once you deliver the activity, the program will pay you the pre-agreed sum upon evidence of delivery. Simple as that. Now, let's get back to our partners, see how they are doing.
I've been thinking about the difference between real costs and flat rates. It's really saving us a lot of time in budget planning, isn't it?
Absolutely. The process of calculating the flat rate is so straightforward, and I love that it's all automated in the electronic application system.
Yes, and hopefully you will see even bigger benefits during the implementation. Less administration and reporting work means more focus on the project itself. It's a win-win for everyone. Also, less work for controllers. Keep in mind, though, that you might experience under or over compensation of expenditure.
So, if we get more funds with the flat rate than we actually spend for travels, do we have to return the money to the program?
No, you do not have to return the funds. Your organization is entitled to the funds you receive via the flat rate. But remember also that the flat rate always remains as a percentage of the basis cost. So if your staff cost is lower than planned, you will receive also less for your travels. And as a last note, there is no need to submit any individual invoice of expenditure for simplified cost options. But be sure that you have the evidence that the activity took place. Simplified cost options are designed to make projects more efficient. So we wish you smooth sailing ahead.